Now, Turkey is once again being the perfect boom-bust economy, and financial markets are catching on to that. But actually, towards the end of last year, 2018, Turkish equities were and currency was doing quite well, but it was just a rebound from the low. And of course, now we have a deep economic recession. I don't think it will be very long, but it's deep, so it needs to shake out these economic imbalances. You know, the current account deficit was very big. Now it's being reduced. You had a lot of short-term external debt, not enough reserves. So they need to realign the economy again. In the shorter term. In the longer term, they perhaps need to change the economic model so they don't always build up these imbalances when times are good.
So first of all, we have been positively surprised by the recovery of the market during the last quarter in 2018, based on the situation which Turkey experienced, particularly in August and in September. So the recovery and the lower deficit numbers that came out towards the end of the 2018 were looking pretty good. So in that respect, the key thing that we are looking into it right now is the external financing needs, short-term financing needs, which amount to above 200 billion, which need to be solved. That's the next milestone. But other than that, we have a very constructive view on Turkey, particularly from the PE perspective, given what you said is, and which is true, is that relatively low valuations, depressed valuations in the private, in the non-listed market. We see a lot of investment opportunities. Besides that, we have a significant exposure to Turkish PE through the two investments that we hold in our fund number 4. And based on the developments on those two investments, we are very confident about the prospects of these two companies, because they have weathered these disruptions in the market very well. We have managed to list one company in 2018 in May, and we were managed to repay most of the debt of that company from the IPO proceeds. So from that perspective, this company is very well positioned to basically use up the less of the liquidity in the market and grow faster than it would otherwise. So in that sense, we think that we have a constructive and positive view on Turkey.
The full recovery will depend really on the Turkish central bank showing itself to be relatively independent over a sustainable period of time. The main problem that Turkey's had over the last 2 or 3 years has been that the central bank has been increasingly dominated by political factors, and therefore rates have been kept far too low for far too long. And that was the result of that was an overheated economy in 2017 and a rise in inflation, a massive blowout in the current account deficit, and the recession which subsequently followed after the lira reached as high as 7 to the dollar. So what has to happen is that interest rates need to stay high, inflation needs to be tamed. Inflation peaked at well over 20%. It's probably actually going to continue to stay at that level until the end of the first half of this year, before falling relatively rapidly. And the key thing is that interest rates need to be kept high enough to squeeze inflation out of the economy.